Hello everybody, a very good morning to you and welcome back to a brand new week in the markets here at Taurex and at Moss. It's very good to have you all with us this morning on this Monday morning. It's 11 o'clock for me, so I'm pretty much doing what I do every single Monday, which is taking a look at what are our biggest events in terms of economic events, and also where we may see the volatility come and where the best moves and best trading opportunities may come from this week. So it's our Monday weekly preview stream. Hello to those who are watching on YouTube and on Discord. I do have to apologise. I think I forgot to post the streaming schedule in one of the Discord channels, in the Taurex one. So I'll check that after. So probably not have as many people on as normal, which is my fault. But you can watch on catch up, of course. And I have notified you on the Discord channel that I'm live. So hopefully you can join. Curtin, hello to you. It's good to see you. Chotty Pong, hello. Good to see you. Thank you very much for tuning in. And I hope you're doing well. I hope everyone had a good weekend. So it was a fairly calm weekend again. And we're going to really try and determine if this week we maybe see a bit more of a risk on week. That's sort of like my base case figure. And by risk on, I mean potentially a good week for the stock market. Maybe even a good week for the US dollar, which has been selling off quite aggressively. ST Wall Street, hello to you. Good to see you. Thank you very much for tuning in. Just to give everyone an update as well on the giveaways. I'm still waiting for the T's and C's from compliance. As soon as they're ready, I will be... You will know, and I will put them on Discord channels. You'll see them in our thumbnails as well, and I will let you know everything about the giveaways. So fingers crossed. I believe the timeline I've been given is this week for the T's and C's. Obviously, things are very busy, so it's out of my hands basically. But we're ready to go, and as soon as I get those T's and C's, the giveaways will be here every stream. So hopefully you can join me there. T minus, hello to you, Dan. Good to see you. Hope you're doing well, mate. And Osama, it's all good. I've only really just started. Osama, I hope you're doing well, and thank you very much for tuning in. I hope you had a good weekend. So, right, let's break down this week. It's actually quite a busy week in terms of economic news. So over the weekend, we didn't really learn too much, I don't think, from the tariff perspective. However, we did get some news around the peace talk situation over in Russia and Ukraine, with the war that's going on there. So Zelensky said he's hopeful for a reliable and lasting peace after meeting one-on-one with US President Donald Trump, who later questioned whether Russia's Vladimir Putin genuinely wants to end the war in Ukraine. So what we're seeing here is we're seeing slow progress, but it's very, very normal for this to be a lot of back and forth. So investors are watching for any signs of progress in US trade negotiations after Trump suggested another delay to his higher tariffs was unlikely. And that was really all we needed to worry about over the weekend, which is actually thankful, because when you turn up on Monday and you've got a busy week and then all the stuff happening over the weekend hits you as well, it's quite a lot to digest in terms of market moves. So when we look at the moves that happened over the weekend, if I just held it onto my stream, and we look always on a Monday, you know, I always do this. I look to see if there's any sort of like fair value gaps. We are trading in one here. You see that? Yeah, that was from Friday to Monday. This is on the NASDAQ. We are trading in a gap at the moment. So you could argue, if you wanted a short-term, you know, Monday scalp, it's in the trade I'm going to place, and I'll tell you why in a second. But it's definitely got legs. But what I'd prefer to do is actually play the what I call the inverse fair value gap, which is essentially where you have the fair value gap which is broken, and you play the other side of it. So a break above this fair value gap, a retest, and then maybe to go higher, should we get more of a risk on week. Just an update on one of my trades. So I lost 1% on this trade as per when did I stream? On Wednesday, was it? Yeah, on Wednesday. Did move into some profit, but I never got to 1-to-1. We actually traded right into, it's probably a mistake from my part actually. You can see how we traded into this fair value gap, and it acted as support, and then we went higher and broke above my stop loss, which is above this high. And I thought maybe we would see this trend line resistance be respected, but it wasn't to be so. Okay, 1% loss, that's fine. We did make a good trade on it before that, so that's all good. You can actually see how we've now broken above it, and the actual outlook isn't looking too bad. So should there be continued peace talks, maybe negotiations around tariffs, should we continue to see that, then this could feed into some more risk on play in the short term. I still think there's a lot coming down the line in terms of whether we're going to see a recession or anything like that, but we're talking about day trading here, 4 hour, 1 hour, a weekly view, and this could be a risk on week. It could also be a risk off week, but from what I've seen over the weekend, it's fairly calm, and I don't see more bad news being priced in. I think we've priced in the maximum already for so far. There's nothing new. So that could be a good scalping opportunity. We are actually moving out of it right now. Similar sort of thing here on the S&P 500. Look, you can see where Friday closed and Monday opened. This is one of my easy strategies that literally anyone can learn this. It's literally just mark Friday's close to Monday's open, right? And there's your fair value gap, and it can be used as support and resistance. And you normally get a fairly good risk reward as well. And if you get to 1-to-1, you can look to move that to your stop loss to your entry, and then you're risk free. US 30 as well. Look, all three trading in a fair value gap. So there's three potential, scalp analysis for you. And look, just to show you how powerful it is. For some reason, I keep getting these ads. I thought I had the premium. Just to show you how powerful it is. Look what happened last week. This is the US 30. Break above the fair value gap. Retest. And now moving higher. So you can see how it acts as support. Okay, yes, this is potentially a selling setup. I was a bit late to it. But you don't have to just play the initial moves. This is obviously a bearish fair value gap. Again, you can wait for this and look for the inverse. You can play both of those sides. Okay. Right. Not seeing too many other big news. The Forex market's quite quiet. So now I'm going to go, and gold's down 1%. We'll take a look at gold as well. Just want to quickly show you the economic calendar for this week, because it's quite a busy week actually. Quite like a few. There's not loads of data points, but the data points we've got are really, really important. So let me go through them. So, we don't really have anything on Monday and Tuesday. The first piece of high impact news we have comes on Wednesday, which again leads me to believe that with no news is good news in a way at the moment. So this could be a positive start to the week in terms of risk on trading, your crypto trading, your crypto buys, your stock market buys, all those risky assets. That could be the play. As we head into Wednesday, it's our first lot of, sorry, go back to Wednesday here. It's our first lot of high impact news. GDP figures out of Europe, so that could put some volatility in the euro for this week. I think it's going to be quite a slow start to Forex. I'm not actually really looking to trade Forex early this week. I'm probably going to leave that to the side. Core PCE, core personal consumption and GDP on from the US on Wednesday. That's weird. They've got the core PCE price index on Wednesday. It's normally on a Friday. But okay, that's important. So you've got on Wednesday, the US data really starts to kick in, because I can see the core PCE, which is an inflation report, GDP, and also our first employment look, which is the ADP non-farm employment change. So those three data points are quite important, and I think will feed into, that's the day I think we start to see volatility, particularly in US markets, but I'm talking about like the US dollar and Forex in general, because there's not much that happens before that, but Wednesday we really start to see the high impact news come in. And then as we head into Thursday, you can see we've got the Bank of Japan interest rate decision, which is a big one. Really, really interested to see how this one goes. So what we're expecting from the Bank of Japan, we're not expecting them to hike rates. We're expecting them to keep rates as they are. So keep them at 0.5%, as you can see. I want to show you this article actually that I was reading earlier. Hopefully you can see that now. There you go. So what we're expecting, the Bank of Japan is expected to keep interest rates steady and warn of heightening risks to the fragile economy that could keep policy in a holding pattern as US tariffs continue to hit confidence. The debate may be swayed by what Bank of Japan Governor Ueda heard in Washington last week, where the IMF, which is the International Monetary Fund, slashed its global growth forecasts and policymakers' threat about further damage to their economies from US trade policy. While the Bank of Japan is set to downgrade its growth forecasts, it is expected to signal that risks from higher US tariffs won't derail wage and price hikes, seen as crucial for further rate increases, sources have told Reuters. But the path towards normalization may take longer than previously expected. The balance of risk is on the downside for growth and for inflation. So projecting that the BOJ is so what I'm reading as I keep seeing that the language that's being used is we're expecting the Bank of Japan to hold rates, to also downgrade their growth forecasts, but at the same time also push back rate hikes further into the future. And that says to me that we may see some yen weakness, because that's quite dovish. It's certainly less hawkish than what we've been expecting from the Bank of Japan. Okay. And I've been eyeing up a reversal in dollar yen for quite some time, because we have come quite far. Okay. Had some really nice trades on dollar yen. I'm actually going to get rid of everything and just sort of start fresh. The only thing that puts me off about it is when I look here, we failed to take out this low. I would have preferred dollar yen to just go a little bit further, wick into that area and go higher. But we did test 140, which is a massive area, and we're seeing some support. The difficulty here, the reason that the yen has strengthened so much, isn't necessarily because, well, it is because of a slightly more, an increasingly hawkish Bank of Japan. We've been used to them having lower interest rates, but it's also been the safe haven Forex trade, right? Because of all this risk from tariffs, etc. Everyone's flocking into the Japanese yen. So, actually, when you think about it, if the Bank of Japan come out and they're worried about tariffs, that may actually cause more safe haven flows into the Japanese yen. So it's a bit of a tricky one to digest. But from a technical standpoint, I think we've still got some more upside here. And I think we could probably target somewhere around 146. Because we've got a bit of a candlestick imbalance. I love the 4-hour time frame. It's my favourite time frame. So you can see we've got a 4-hour imbalance here. So I do think that we could still be bearish on dollar yen, because you can see that lower low, lower high, lower low, liquidity grab, new low, new low. We could still create a higher low, a lower high here. Sorry. So we could still be bearish. So, if we do manage to get into a decent trade, that could be a good target. But I'm trying to see if there is any evidence of that. What about if I test my trend rider strategy? Let's have a look. I don't know where we are, because for some reason my my indicators aren't working. I think something's gone wrong with my account. I'll have to have a look at that after. Anyone here uses the trend rider? Hello, Crypto Gambles. Which one do you mean? Do you mean on which FEG are you talking about? The ones I tagged at the start of the stream, or the one on What market were we on? Dollar yen. Dollar yen one. Why is this an FVG? Because if we zoom in, I don't actually call these FVGs, I call them imbalances. Okay. So look, on this new leg lower, you can see that at some points during that move, price became imbalanced, which is basically where we have a disparity between buyers and sellers. It normally happens when we have a strong candle. You suggest SR better than lines. What do you mean by SR? Support resistance better than lines. And I'm drawing from this wick here to this wick. That's our imbalance. Okay? And they can be good targets. They could be good take profit targets when the price becomes balanced again. Curtin, you got the trend rider on oil. Okay. Nice. So anyway, either way, I think there's some volatility coming this from Wednesday when it comes to especially dollar yen, but dollar related pairs in general. Let me just continue with the calendar and I'll go back to the charts, because it's important to note that we've got the manufacturing PMIs on Thursday, and then it's the big one. Really, really important. Just ignore all of this. All I want you to focus on is non-farm payrolls. That is really a really massive. To be honest, I say that every non-farm payroll is always important, right? Because it's a show of how strong the US labour market is. But in this current time, with tariffs, with talks of recession, 50-50, JP Morgan 50% chance of recession, 50% chance of not. Things that will sway that, things like non-farm payrolls. Why? Because the jobs market is what goes when there's a recession. Layoffs, redundancies, etc. Not as many job openings where businesses are cutting down on costs, etc. So will we see any evidence of a continued weakening in the US labour market on Friday? Well, that's what we're going to find out. Previously, we saw 228,000 on the jobs created from the previous month. The forecast this time around is for 130. So we actually beat estimates last time. And I believe the unemployment rate ticked a little bit higher. But it wasn't too damaging. We haven't had that report yet, which goes, that's the moment that we've seen a big drop-off in the US labour market. That is what's I think going to be needed to see more risk-off trading. Should it be another fairly okay US jobs report with not really too many surprises, then again, I think that feeds into some more risk-on trading. Obviously, if things do come out regarding tariffs and new tariffs or anything like that, then that story could change very quickly. We're still sort of in fragile times, but I'm leaning towards a risk-on week. Okay, let me load up the US dollar, which now is trading back up towards 100. Okay. Delete everything. Not only trades back up towards 100, but trades into quite a lot of resistance. Of resistance. This was previously support, as you can see, that sort of 100 to 102 level. And I think we're going to see a move back up to at least maybe test 100 or 101 this week. Now, I'm not turning bullish on the US dollar by any means, but you have to be said that we have come quite far. We've had a bullish engulfing candle near the bottom on the daily, and we haven't traded up towards resistance, and there's a little gap there. So I do believe that the US dollar the dollar index has room to move up to these areas, which is basically like what was previously support now turns resistance. And then we'll see, are we going to get a break above it and therefore maybe a continuation back up into the 104s, or are we really that bearish on the dollar that we see something like that and a new leg lower? If I had to hang my hat on it, I would prefer, that's because I shouldn't be biased actually, but I seem to have this subconscious bias when it comes to the US dollar, and that it's never down for too long. Um, and I would say if someone said to me, you know, what would you bet your last pound on? I'd say I think probably something like this. But the trend is your friend and everything, and the trend is definitely bearish right now. So yeah, we can see a counter trend move. So when I summarize the week, for me, it's like I believe this could be like a counter trend week. That week where we see all those markets which massively, you know, exploded. You know, your Swiss franc, your Japanese yen, gold, and the stock market, etc. This could be a week of potentially more calm and stability. A bit like last week, actually. That was fairly calm, all in all. And I think this week could be similar. But there's more roadblocks on the way. You know, non-farm payrolls, etc., which could change that. But that's what I would say. US 30. How is that a fair value gap? What, here? That is a fair value gap, no? There's Friday. Sorry, it's actually even here. That's where Friday closed. This is where Monday opened. That's our gap. I like this. I like the look of this because I want to see a break above it. These are my top trades for the beginning of the week, by the way. The trades that I'm going to look to place. So, it's going to be difficult for anyone, unless you're on the live stream now. It's going to be difficult to post this in the Discord channel. But my favourite trade idea for me right now is playing the inverse fair value gap of any of these pairs. So the first one that breaks, I'm going to play the other side, and I'm going to look to go higher because of all the reasons I just said fundamentally. Yeah, so that's what I'm going to do. I'll try and post. I probably can post all three charts, can't I? Yeah, why not? I can post all three. So I'm going to post this one. And then I'm going to post the US 100 as well, the NASDAQ, and then also the US 30. Okay. Gold. Gold. Let's have a look. I did post some analysis on gold on Friday. I believe that with gold, obviously, it still remains bullish. It's quite obvious. However, we have tried to have this 38.2% as support. You can see that. But look, we can see that we're rolling over a little bit. So I believe that gold, I would like to see gold back down at 3,150, or say 3,160, which is where this sort of golden pocket is. I'd quite like to see that. And with what I'm thinking this week's going to be, I've not got a crystal ball, but what I'm thinking this week's going to be, from what I've studied and what my opinion is that we have a slightly more risk on week with a slightly stronger dollar, stock market slightly stronger as well, and that may feed into a continuation of the downside in gold down towards the 3,160 level. From there we reassess, because I do believe that it could act as great support. And should we fall any further than that, then we have got strong trendline daily resistance support down at 3,100 as well. So there's plenty of support coming in. I just wouldn't buy it just yet, and I certainly wouldn't sell it. It's just a market I'm not interested in shorting, because literally it could explode at any moment with with the stuff that's going on. So yeah, I like a continuation of the rollover down to 3,160. If any of you guys manage to get into a trade on that, good luck. That would be my personal target. And Dan, I'm looking at gold heading towards 3,226 ish. But here, This area in here, yeah, that could be support. That's also the 50%. Don't disagree with that. I wouldn't really call it a demand zone, but I'm just so you can see it. Yeah, there's some good confluence there. I guess I'm being a bit more aggressive in terms of the discount I want, because I know how far gold's come, so I'm like, I really want it to drop a lot first. Any other questions, anybody? Anyone got any questions they want me to go through? As per wave theory, gold can't be below 3240. So if we break below 3240 with your analysis, that's it. Okay. Sort of marries up with what Dan's saying as well, at 3226, 3240. It's all in that area, right? So there could be some support there. Okay. What I'm going to do now is I'm going to post the trade ideas from this morning into the Osama would be in buys. Okay. I'm going to post the trade ideas from this stream from into the Discord channel. I have to say the only really ones I like for the beginning of the week is the gold fair value, not gold, is the stock market indices fair value gap inverse thing. Try and catch on some Monday momentum. Other than that, the markets, it's a Monday, it's early days. I'd rather wait for them to take shape a little bit more. I do like the idea of maybe some dollar upside, but to be honest with you, a lot of these trades that I've told you about, or these moves that I've told you about, they're counter trend really. So it might not be a massively active trading week for me, because I don't really like going counter trend, to be honest. And I always sort of lower my risk a little bit, and I'm a bit more aggressive in my risk management when I'm going counter trend. But yeah, that's just my opinion. And yeah, we'll see. We can still get some good trades, and I'm definitely going to place one of those stock market ones, those inverse fair value gap ones. See how we get on. If I get to 1-to-1, I'll be risk free anyway, so it's worth a go. Okay, thank you very much to those who tuned in today. Let me know if you need anything from me in the Discord channel. Again, with the giveaways, everyone will know when they're ready. So I do apologise for the delay in that. There's a lot that has to happen in the background, but they're going to be really exciting and really good. And like for example, now I'll be doing a live draw to see who won. So yeah, when they're ready, I'll make sure I let you know. And until then, trade well, trade safe, and hang on, when is the Connor Wood signed T-shirt? I like that. That's a good idea. I don't think anyone would really want a signed T-shirt from me, but if you do want that as part of the giveaways, then sure. Nice one. Okay then, guys. Trade well, trade safe. Take care, guys. See you in a bit. Bye.